Good afternoon, everyone. Today, I and Warren will discuss to you the past 33, which is the earnings per share. The objective of this topic or chapter is to define and know the proper presentation of earnings per share, to know the formula in computing basic earnings per share and diluted earnings per share, to determine the weighted average number of ordinary shares, and lastly, to identify potential ordinary shares computing diluted earnings per share. Okay, so what is earnings per share? Earnings per share is one of the attributes to every ordinary share outstanding during the period. It also only pertains to ordinary share, and it is not necessary for preference share because there is a definite rate of return for such share. So, ordinary share is an equity instrument that is subordinate to all other classes of instrument. Earnings per share is one of the most important variables for determining a company's share prices. A high earnings per share indicates that the company is more profitable and has more profits to distribute to his or her shareholders. There are two presentations in computing the earnings per share, and the first one is the basic earnings per share. Basic earnings per share tells investors how much of a firm's net income was allotted to each share of common stock. It is reported in a company's income statement. It is especially informative for businesses with only common stock in their capital structure. And the second one is the diluted earnings per share. It calculates a company's earnings per share if all convertible securities were converted. Diluted securities are in common stock, but instead securities can be converted to common stock. The presentation of earnings per share is only required for letter A, entities whose ordinary shares are publicly traded, and letter B, entities that are in the process of issuing ordinary shares or potential ordinary shares in the public securities market. On the other hand, public entities are required to present earnings per share, and non-entities are not required but are encouraged to present earnings per share. And there are three uses of earnings per share. The first one is that it is a determinant of the market price of ordinary share, thus indicating the attractiveness of the ordinary share as an investment. Letter B, it is measure of performance of management in conducting operations. And lastly, it is the basis of dividend policy of an entity. And the entity of a certain company shall present on the face of the income statement basic and diluted earnings per share for income or loss from the continuing operations. And with an entity that reports a discontinued operation shall disclose the basic and diluted amounts per share for the discontinued operations, either on the face of the income statement or in the notes of the statements. And also, an entity shall present basic and diluted earnings per share even if the amounts are negative. For example, basic loss per share. And we must take note that when an entity presents both consolidated financial statements and separate financial statements, the disclosures required by the standard need to be presented only on the basis of the consolidated information. To compute or get the basic earnings per share, we must use the formula basic earnings per share equals to net income over ordinary shares outstanding. The net income here is equal to the amount after deducting dividends on preference share. And if the preference share is cumulative, the preference dividend for the current year only is deducted from the net income, whether such dividend declared or not. And if the preference share is non-cumulative, the preference dividend for the current year is deducted from the net income only if there is a declaration. And lastly, if there is a significant change in the ordinary share capital during this year, the weighted average number of ordinary shares outstanding during the period should be used as a denominator. And for the basic loss per share, if the preference share is cumulative, the preference dividend is added from the net loss to get the total loss of the ordinary shareholders. And if the preference share is non-cumulative, the preference dividend is ignored because presumably there is no declaration since there is a net loss. So, there is a net loss kaya yun. So next, we have the dilution and anti-dilution. The potential ordinary share is defined as a financial instrument or other contract that may entitle the holder to ordinary shares. So when do the dilution and anti-dilution arises? The dilution arises when the inclusion of the potential ordinary share decrease the basic earning per share or increase the basic loss per share. So, on the other hand, the anti-dilution arises when the inclusion of the potential ordinary share increases the basic earning per share or decreases the basic loss per share. So, diluted earnings per share. The computation of the diluted earning per share is based on the as-if scenario related to the following potential order shares. So, letter A, we have as if the convertible bond payable is converted into ordinary share. Letter B, as if the convertible preference share is converted into ordinary share. And lastly, as if the share options and warrants are exercised. On the other hand, the computation of the diluted earnings per share is based on the assumption that additional ordinary shares are issued as a result of conversion of convertible securities and exercise of the options.
So what is convertible bond? Convertible bond are long-term liabilities grouped in a bond payable account. It's a fixed income corporate debt security that yields interest payment but can be converted into a predetermined number of common stocks or equity shares. So convertible preference share. Convertible preference share is our preference share that includes an option for holder to convert the shares into fixed number of common share after a predetermined date. So if there is a convertible preference share, the computation of diluted earning per share are also assumed that the preference share is converted into ordinary share. Options and warrants. Share options are granted to both employee and shareholders, enable them to acquire ordinary shares of entity at specified price during a definite period of time. Option and warrants are diluted if the exercise price or option price is less than the average market price of the ordinary share. So treasury share method is used to simplify the computation of incremental ordinary share that are assumed to be used for no consideration as a result of option and warrants. The option and warrants are assumed to be exercised at the beginning of the current year or the day they are issued during the current year. Or the proceeds from the exercise of the option and warrants are assumed to be used to acquire treasury shares at average market price, and the number of incremental ordinary shares is equal to option shares minus the assumed treasury shares acquired. The disclosure of earning per share. So first, if the amount used as the numerator in calculating basic diluted per share and reconciliation of profit and loss. Second, the weighted average number of ordinary share used as denominator in calculating basic and diluted earning per share and reconciliation of this denominator to each other. Lastly, the instrument that could be potentially diluted basic earning per share in the future but were not included in the calculation of diluted earning per share because of anti-dilutive for the period. For more understanding about the theory of earning per share, we provide two illustrations by using the two measurement of earning per share, namely the basic and dilutive earning per share. So, first illustration, an entity had the following data at the beginning of the current year. So net income of 5 million, ordinary share capital of 10 million, which is 100 par 100,000 shares. Employee share option, we have option shares of 30,000, option price of 150, average market price of 250. Income from continuing operation, we have 1,500,000. Preference dividend for current year, we have 100,000, which is 10% of 1 million. And subtract the 1,500,000 minus 100,000, which is the preference dividend, to get the income to ordinary share of 1,400,000. So income from continuing operation, we have 28. We simply divide 1,400,000 divided by 50 shares. Income from continuing operation, we have 10. 500,000 divided by 50 shares, and add the continuing operation and discontinued operation to get the net income. Using the first measurement, which is the basic earning per share, we use the formula of basic earning per share equals net income divided by ordinary share. So we have 5 million net income, and ordinary share outstanding, we have 100,000 shares. Divide to get the 50 basic earning per share. Second measurement of earning per share, we have diluted earning per share. So net income of 5 million, option shares of 30,000, option price times option price of 150 to get the proceeds from assumed exercise of options, total of 4,500,000 divided by the average market price of 250, and to get that assumed treasury shares of 18,000. So option shares of 30,000, subtract by assumed treasury shares to get the potential ordinary share of 12,000. Ordinary share actual outstanding, we have amount of 100,000, potential ordinary share of 12,000, add to get the total ordinary share of 112,000. To calculate the diluted earning per share, we use a formula of net income divided by the ordinary share. So we have 5 million net income divided by the total ordinary share of 112,000. We get 44.64 diluted earning per share. Second measurement of earning per share, we have diluted earning per share. So net income of 5 million, option shares of 30,000, option price times option price of 150 to get the proceeds from assumed exercise of options, total of 4,500,000 divided by the average market price of 250, and to get that assumed treasury shares of 18,000. So option shares of 30,000, subtract by assumed treasury shares to get the potential ordinary share of 12,000. And now we use second measurement of loss per share, which is the diluted loss per share. We have net loss per share of 5 million, ordinary share actual outstanding of 100,000, assume ordinary share issued through conversion of preference share of 40,000, get the total of ordinary share of 140,000. To calculate the diluted loss per share, we still use the net loss divided by the ordinary share. We have net loss of 5 million divided by the 140 ordinary share to get the total of 35.71 diluted loss per share. And now we use second measurement of loss per share, which is the diluted loss per share. We have net loss per share of 5 million, ordinary share actual outstanding of 100,000, assume ordinary share issued through conversion of preference share of 40,000, get the total of ordinary share of 140,000. To calculate the diluted loss per share, we still use the net loss divided by the ordinary share. We have net loss of 5 million divided by the 140 ordinary share to get the total of 35.71 diluted loss per share.